What's going on, everybody? Happy Monday. It's September 19th. We have a new week ahead of us and also some important events that we have coming up from the FOMC. But first, let's take a look at markets. BTC currently sitting at $18,800. We're still traversing down this channel that I drew several months ago. We rejected the top of the channel right here in the middle of August and right here in the middle of September. And you could kind of see now that we're just sitting right near the EQ of the channel, the equilibrium. And we've yet to break below that. If we do have a break below that, let's just say we break down by the end of the month, you may expect another 19 to 20% drop towards maybe $15,000 or 14.5, somewhere at the bottom of this channel. So just something to keep in mind from this channel perspective. Okay. On a weekly basis, we've talked about a couple of different things that are happening in crypto now versus things that did not historically happen, which is usually in the historical cycles in 2015, 2017, and 18, we saw Bitcoin respect the 200 weekly EMAs and MAs on the weekly chart, right? And here you could see back here in 2018, we dropped right into that 200 weekly MA, bounced up off it. We stayed between this area for 2 or 3 months, but then we broke out. Here again, March 2020 COVID crash, we came down, wicked into both MAs, and then took off. This time around, it's actually a little bit different. We've never spent so much time inside both the 200 weekly EMA as well as the MA. And this is, in my opinion, probably one of the more scarier things that's happening in the markets. Not just because from the moving average perspective, but simply due to the fact that the previous all-time high, which was 20,000, we are currently sitting, or in fact, broken under it. And we've spent, some few days or actually like a few weeks put together inside this 20,000 previous high level. If you add collectively all the days together that we spent separately here. And now currently we're at 18,800. And if we do start breaking back inside this previous all-time high, well, the next big level to the downside is possibly towards this ascending trend line that you see. And it could be, maybe like 13.5, 14.5 that I just mentioned earlier. So that could be a big drop right into this particular area, something that you should probably be watching very carefully. The other level I'm watching carefully is this 12,000 level, which rejected price back here in January 2018, multiple times here in June and July 2019, here in August 2020. And once we broke up from it, right, we never retested that level of support. So that level of support, if we can get back towards it, would be closer to $12,000. Who knows? Maybe we have this kind of big candle drop like we did in COVID crash in the next coming weeks, where we drop right into 12,000, maybe 10,000, and we close back up here above 13.5, 15, something like that. Okay, so I'll be watching for that kind of scenario. And I urge you guys to be watching for that kind of scenario too, with these levels in mind that I've pointed out. Now, real quick, if you do enjoy our content, I would really appreciate you hitting a thumbs up on our channel, supporting our community, leaving us a comment of your thoughts. I've been doing these videos and running this channel for a while. If you go back all the way to 2017 and 18 and 19, we've grinded all through the previous bull market as well as the bear market. We went all through the 2019 and 20 time where we had the big COVID crash. And then 2021 and 2022, we're still here. And you can see we've put out hundreds and thousands of videos on our YouTube channel, as well as private videos that I do for my Advantage members, which is in the Advantage announcements channel. If you want private videos where you get to see the trades that I'm putting out, the private research and analysis that I'm putting out, and hour to hour analysis through the entire day. All right, this is where you can join our community. You can go to thealphatrades.com, hit the products page right there, join the Advantage subscription. It's $97 per month if you want to join it on a month-to-month basis, but I'm right now offering a lifetime access to our community. Okay, I've been around, like I said, for 4 or 5 years already, and I plan on being around for a long period of time in our community because I love crypto. And I think this is the only asset class that is so amazing, moves so fast, has such incredible growth potential that I'm going to be here, for a while in the crypto space. So if you are interested in being here for a while in crypto because you believe that this is where you can be, financially free and you want to build something in crypto, you want to grow in crypto, then come join our community with lifetime access, $1,750, a one-time payment. This gives you access to videos that you're seeing right now, as well as all these Discord channels right here where I put out daily analysis, daily announcements, education material, indicator analysis, all kinds of information, private research that we're looking at in terms of different altcoins, different areas of crypto that are coming up, different aspects of the market that we're looking at. All that stuff is available to you with this membership right here. And again, if you don't want to join the lifetime, we have monthly starter packages, 3 months, 6 months, 1 year. Okay. I do hope y'all join because I really believe that the fact that the prices are actually down right now is where you really need to start ramping up your research and contributing more time to the market to figure out what is ahead of us. More often than not, what we see is as prices start to break down as they are right now, people lose interest and they start giving up on crypto and they start leaving the space and calling it a scam and they start shitting on projects and they start talking about things going to zero. It is the typical reaction of human nature, which is as prices start to go down, people start to give up hope and they leave the space, and whatever they thought about the space was not true because they didn't make money out of it. And so they just start hating it and they start calling things a scam because they just don't quite understand it. Well, I believe that this is the time to keep, your eye out on projects, to build, to research, to start putting out, information or research that you find may be helpful and maybe even contributing to your community if you want to, right? And by the way, if you do have amazing research that you want to talk about, guess what? Our community, myself, I will pay for that research if you are interested in joining, okay? So part of it is you can be a contributor to the space and you join our community if you want to just contribute on research, or you want to sell your research, or you have something unique to offer, or you join our community to do both, which is either contribute research as well as absorb information and absorb research, which I would put out. And you can join one of these packages, okay? Anyway, getting back to the analysis, right? One thing we got to talk about is bond yields, okay? Bond yields are particularly important because, as you very well know, inflation has been a very hot topic of the market, okay? This coming week, we have the FOMC meeting on Wednesday, which is projected to have a 75 basis point hike, right? Why? Because guess what? Last week we saw inflation drop right around this area right here, higher than the previous month, and a year over year inflation rate change, which was higher. And this really spooked the market because when the market was actually moving up like this, almost everybody was under the assumption that inflation is going to start rolling over and it's going to start coming down, but that is not what happened. And in fact, that little print on inflation scared everybody and that nuked the market further. And here we are now, broken back inside the 20,000 level, sitting at 18.8, with pretty much no floor under us until maybe, I don't know, the 17.5 level right here that we put in June. Maybe that holds, right? Or maybe not. Maybe we nuke towards 14 or 15 or 12K, those levels that we spoke about earlier, right? So this is one of the scarier things that happened the past week, where that CPI print turned out to be very ugly. And based on that, the bond yields started really ramping up and printing higher. The 2-year, the 5-year, the 10-year, and the 30-year really start to spook up higher. And that really, I think, is giving a warning sign to the stock market. And this is what happened to the stock market as well, right? We saw pretty sharp selling into last week, and then we've been dropping and taking out the low at the beginning of September right there as well. Okay, so all these things are creating sort of a storm, if you will, that's brewing and it's building up for the market, depending on what the Fed does this week. Now, in my opinion, at minimum, the Fed hikes 75 basis points. But if it hikes, say 100 with another potential for another 100 basis point hike, say in October or maybe November, and if they telegraph something like that, I think that is going to cause a gigantic nuke in the crypto markets. And that, in my opinion, is going to present some unique opportunities. First opportunity being the levels I spoke about on BTC. Second opportunity being I'll be watching, a couple of short opportunities on assets like Matic. So I believe that Matic has probably hit like a local, low. I wouldn't say this is like the terminal low, but a local low right here, because it is basically taken out all the liquidity from back here in August with this current candle that you see right there. And now I think from here, Matic is going to try to bounce back up and maybe create something like that, which may create a head and shoulders style pattern where maybe by the end of September, right, we then start breaking down. Okay. If that is to be the case, I expect the other parts of the market to break down, right? I expect Matic to break down. I expect BTC to break down. Ethereum has already broken down. If you look at ETH, right, we've talked about this level before on ETH. We said, keep an eye on this previous, resistance point that capped us all the way here in June and July before we got that news about the merge somewhere around here. And then we saw a big price pop on ETH, right? ETH went basically from 1,000 to 2,000. So that's a nice 100% gain. But since the ETH merge news has pretty much been behind us, which was, I think, right around here, right? We've been dropping since. Okay, we've dropped, I think, almost like 24, 25% since that merge news came out. Now here in Ethereum, I think this is another scary thing that I see building out. Number one, we definitely see a head and shoulders pattern right there. And in the midst of that, maybe a right tilted, another head and shoulders pattern, quite possibly building. And if this head and shoulders maps out, this should be taking us back towards $1,000 at minimum, and quite possibly all the way to the weekly SR level of 2018, which is close to $800. So these are the things that you want to be watching out for, and could be a potential shorting opportunity. If you see a pop like this, you see price take out this level with this liquidity right up here, and then it starts to roll over again. That's your short. Stop somewhere up here, take this trade to $1,000 to $800. Okay, non-investment advice. I'm just letting you know that's what I would be interested in seeing. Now, again, today's Monday. Wednesday's the FOMC hike. Between today and Wednesday, a lot of shit can happen. Okay, crypto markets are very unique in basically baiting people before events or before anticipating the event and creating almost like an opportunistic point in markets where you feel like, oh, markets look like they're breaking down ahead of the FOMC event. So let me just short here, right? So people would say, well, let me just short here because the market looks weak and we're headed into the FOMC event, which obviously looks like it's going to be shit, right? So people are short and then they'll get their faces squeezed off as prices go back towards 19 and a half, maybe even 20. And then when the FOMC event hits, there will be so much volatility. It'd be like this, and then ultimately nuke. In this area, they either liquidate themselves or they chop themselves up to death, and then the market eventually breaks down. So keep an eye on that kind of situation where you don't get caught in this complete mess. I personally think that the market from today up until Wednesday should be a level to level or a non-tradable zone. Okay. I believe the market is going to stay between, for BTC, is going to stay between here and I think 19,500. So this little range right here, I think that will be the range for BTC. For Ethereum, I think similarly, which is, I think ETH is going to stay between right here, which is say 1,300, and quite possibly this previous low, which is around 1,400, right? 1,300 to 1,400, this little zone right here. I don't think ETH breaks above this level. So if ETH comes back towards this 1,400 high, this is probably a short back towards range low, short back towards range low, and then you can get an opportunity to long these up until this range high. Okay, that would be the tradable zone. Again, not investment advice. Don't sue me. Atom, I think Atom is probably one of the strongest, looking assets. As I've talked about before, Atom has really not shown any signs of resilience of momentum slowdown. The 20 and the 40 EMAs on a daily chart, which show momentum, they're clearly still pointing up with really no sign of slowdowns whatsoever. And I think that just goes to show that Atom is still pretty strong, and it can actually continue to go up in the face of the rest of the market, just kind of chopping about sideways. Fading Atom is going to be extremely tough unless this kind of scenario happens, okay? I pointed this out last week, and I said, watch Atom come into this previous high around 17 and some change, right? Let it take out this high, okay? So let it take out this high and do something like this and then break down. Now, you can see Atom over here. This is FTX Atom Perp, okay? FTX actually took out this local high, but other exchanges, like this is Binance right here. Binance, as you can see, did not take out that high. I don't think Coinbase did either. Let me just check real quick. Okay, Coinbase, Atom. Yeah, see, Coinbase did not take out that high either. Let me just make sure one thing. Atom Perp. Futures contract. See, the futures contract on Binance as well did not take out that high. So I believe that that high right here, which is around 17 and a half, 17 and a quarter, I think that high is vulnerable for liquidity. And if you see a spike into that high and then you see a sharp rejection and a collapse back inside this previous high, then that could be a potential shorting opportunity. Okay, but again, you don't need to fade Atom, right? I'm just letting you know, like, it is one asset that you could pay attention to, but BTC and ETH, which are pretty big liquid assets, are pretty decent fades in the market right now because those assets clearly are not getting a bid, and Atom is catching a bid. So instead of looking to the strongest asset to roll over and shit the bed, we'll focus on some of the weaker looking assets, such as Bitcoin, such as Ethereum, even Rune, which kind of looks like shit, right? All these assets kind of look like crap right now. If you see a squeeze up headed into tonight, tomorrow, early into Wednesday, right? I don't think it would hurt to be in a small short position, okay? All right, again, as I stated before, none of what I say constitutes as financial advice. Please do ask your investment advisor if you do feel like you need to make any investment or strategic decisions regarding your portfolio. I know there's a lot of people out there right now who are a little bit bitter in the market, whether they're not performing well, or they feel like, oh, well, so-and-so person has been telling me to long. And I know there's a lot of people out there who've been constantly telling others to just keep longing the market. And though I feel like, yes, maybe in the longer term, you might be okay, it doesn't mean that, that has to be anytime soon, right? It could be 6 months, 1 year, 2 years from now. And it doesn't mean that you have to be longing every asset on the way down. Like longing, I don't know, Cardano or Rune or Polkadot is not the same as, longing or buying spot of Ethereum or Bitcoin for 2 or 4 or 5 years, right? Bitcoin and ETH can probably, with 90% certainty, be around 5 years from now, but say per protocol or Rune or Cardano or Ren USD, all these, we don't really know where they're going to be in a few years, right? We've seen this kind of cyclicality happen in crypto markets where every few years there's a new cycle, there's a new narrative, there's a new thesis, new L1s that are coming up, or NFTs are a big thing, or DeFi is a big thing, gaming tokens. We don't know what's next. Right, so wait for those kinds of narratives to pop up. Wait for the market to flush out, majority of this garbage that's been around since 2020 and 2021. The only reason they're around still is because the amount of, slow selling that's happening from the standpoint of funds, from retail still being bag holders or still constantly, quote unquote, buying the dip, right? Eventually, all these people are going to get flushed out. And when that flush out happens, whether it's in 3 months or 6 months, right? Well, then you can start looking at opportunities to accumulate, whether with a new thesis, or if you want to believe like Solana is still going to be around, 4 or 5 years from now, and so you want to buy it, or you think that AVAX is going to be the next big thing, or you think Ethereum is still, the top dog of the L1 space, whatever your case may be, at that particular point when the market flushes out everybody, I believe that will be the maximum, opportunity zone. Okay. So other than that, I mean, I don't really have a whole lot else to mention. Levitas data kind of tells us that a lot of risk reversals happen. We see implied volatility definitely spiking up. So the market is expecting, or rather did expect, volatility to start being up a little bit higher in the coming days or coming weeks ahead. We saw options volume kind of come down a little bit from the call side of Ethereum, which means, obviously as Ethereum kept breaking down further and further, we see a lot of longs getting cleaned out, or a lot of call options getting cleaned out or being closed out, right? And then in BTC, what I do see is a lot of put options that got bought up. So I think the put options are a little bit skewed to the upside higher than calls. I would like this ratio to come down closer to 1.0. And what that tells me is, near term, right? I think people are definitely bearish, and there's nothing wrong with being bearish. But if you started buying, puts right here at the bottom, and you're expecting downside right away, well, you may actually, like I stated earlier, you may get squeezed out of the market till like 19 or 19 and a half before the market ultimately breaks down. And that might squeeze out your positions effectively, making your put options worthless depending on when your expiry is. Okay, so these are things that you just want to keep in mind regarding markets. All right, let me see on my Twitter feed. A couple of weeks ago, I kept talking about how why can't the ETH event be a sell the news event? And I know there's a lot of like these threads out there who are talking about, well, Ethereum has to go up because there's so much offside positioning and they're changing their consensus mechanism and all that. While I do believe that ETH is still one of the best ecosystems and L1s that we have, and that's not saying a lot, I get it, because it's still expensive, it's kind of slow and clunky at times, but it still works, and it's very reliable, and it is used as a settlement layer by all, reputable protocols. Everyone in the industry still respects ETH for basically having a pretty decent uptime as well as being very reliable, right? You cannot say the same about other L1 ecosystems. And I think that is the one thing that I believe will keep ETH alive headed into the future, because a lot of institutions trust it, a lot of people, projects trust it, and now it has become a household name. But it doesn't mean that ETH right after the merge has to start going up. I believe that the merge was already being priced in when price went from 1,000 to 2,000. And when the merge came about right there, before even that, the market began to sell this thing right away. And now we're already at $1,300 from the high of 2,000 right here, right? So that just goes to show that the market right now is not in the mood or the momentum where it sees good events and good news events like that to drive prices up further. We're in a bear market where prior to good things happening, the market is going to ramp things up and anticipate, hopefully that thing comes out to be positive. And then that is your sell the news event. And I just thought it was really funny. People made all these intellectual or pseudo-intellectual threads and observations. And guess what? It became as simple as always, which is sell the news, right? So as much as I like ETH for what it is, I also like to shit on ETH and the people supporting it because they just thought that it was going to instantly teleport Ethereum price to 2,500 or 3,000 in the face of all this bad macro data. And I thought that was, complete garbage. So anyway, we are here now at $1,300. We'll see what happens in the next, coming week or so, and especially Wednesday as we have that CPI data or the FOMC meeting come about. All right. that's pretty much it. We've talked about everything that we need to mention. We talked about Atom, which is probably one of the more bullish looking assets still. Matic and maybe even AVAX, Solana, Ethereum. These are all potential short opportunities if you do get a slight pop back up. I do think the trading environment from now until Wednesday is probably going to be a trading range. You'll have to define your own trading range for some of these other assets. I do believe that will be the case. Do be very careful with your leverage and high leverage positions. You may get smacked in the face with a lot of high volatility as we get closer to Wednesday. Okay. Anyway, that's pretty much all I have. Be careful in the market. If you do like our analysis, please do hit the thumbs up. I would really appreciate it. I love doing these videos for y'all, but I would also get, appreciate some appreciation. Okay. Thanks everybody. Y'all take care. Come join our Discord. Like I said, you can go to thealphatrades.com, hit the products page, Advantage sub right there, and you can join one of our memberships here. Okay. Cheers. Have a good rest of the week.